Good morning, good afternoon, good evening to all of you joining us today. Welcome. My name is Melinda Brown, and I have the pleasure of your company for the next hour. Just a housekeeping matter or two before we begin. You have hopefully heard Pascal's remarks in either English or French, but in fact we also have Spanish interpretation as well as French interpretation available for today's session. In case you didn't catch that on the screen earlier, there is a button towards the bottom right-hand side of your Zoom screen with a little globe icon, and if you press on that, you should be able to activate the interpretation function if you would like to use it. One other housekeeping matter, I'm going to launch into the first session of our second day in just a moment. I think we're very happy to take questions, to take comments, and to interact with as many of you as possible during the course of this session. So if you would like to raise a question or make a comment or say something else in relation to what is being presented on the screen, you have the possibility to raise your hand and ask a question directly, or alternatively, you can use the chat function to type your question into there, and we will try to respond to that in due course. Please just bear in mind that with all of us operating virtually, sometimes it can be a little bit difficult to monitor the chat and the hands up and so on. So if we don't get to you immediately, please rest assured that we will be checking both hands up and chat boxes regularly. And so if we don't come to you straight away, please rest assured that we will get to your questions or to your comments when we're able to at an appropriate time during the course of the session. Let me then just get into the subject matter at hand and welcome you once again to this session on developing countries and the OECD G20 Inclusive Framework on BEPS, and the report that we wrote for the G20 finance ministers last year in 2021. To begin with, please let me start with a presentation to set out the background to the report and the main findings of the report and what we've done since producing that report last year. So let me just bear with me one moment while I attempt to share my screen. Hopefully that has appeared correctly on for all of you, but I'm sure somebody will let me know if it hasn't.
Okay, Melinda.
So excellent. Thank you very much for confirming that. So last year, under the Italian G20 presidency, we at the OECD were called upon to produce this report, which examines the place and the participation of developing countries in the inclusive framework on BEPS. So it was a really opportune time last year in 2021. That was 5 years on from the start of the inclusive framework, from the birth of the inclusive framework. And of course, last year was also a really critical time, a really exciting time where we saw a series of high-level discussions which ultimately led to the groundbreaking two-pillar solution to tackle the tax challenges of the digitalization of the economy. So clearly, in the context of that work, of that very difficult work that we were doing on the two-pillar solution, it was a time when multilateralism was clearly more important than ever. The two-pillar solution would not have had a hope without that level of multilateral engagement. But at the same time, it was also quite clear that with a membership of now 141 jurisdictions, the inclusive framework incorporates a very wide range, a wide diversity of jurisdictions, of countries with different levels of capacity, with different types of economies, different priorities, and so on. So ensuring a really level playing field at the inclusive framework, a really inclusive framework in practical terms, definitely has its own challenges, as I'm sure many of you coming from inclusive framework member countries yourselves would be aware. We in the OECD Secretariat certainly welcomed the opportunity and the mandate from the G20 to investigate these matters. We could see how important it was, even before we started writing the report, that all members of the inclusive framework are able to benefit from being part of the inclusive framework, and that all members continue to advance together in a very multilateral way. And because we in the Global Relations and Development Division work especially closely with lower capacity and developing countries, we were really pleased to be given the opportunity specifically to investigate how those kinds of countries were traveling in terms of all aspects of their involvement in the inclusive framework on BEPS. Now, obviously, there has already been a lot of monitoring over the past 5 years of the minimum standards on BEPS, those particular actions which are minimum standards. That's done through peer reviews as a matter of course each and every year. But I think one of the really important parts of this report was that it didn't focus solely on those minimum standards. It looked not just at those aspects, but at all aspects of the BEPS action plan, including the areas that countries themselves might find to be their priorities, which may or may not be the minimum standards themselves. And it's also important that to consider that while the inclusive framework explicitly has as its mandate that all members participate on an equal footing, it's important to remember as well that the inclusive framework itself was, of course, born out of a mandate from the G20. So the very fact that we have an inclusive framework and that the inclusive framework is the forum that we have for discussing international tax standards is already a step change. It's already a huge advance in terms of the international tax architecture. But the diverse range of members with their diverse range of capacities and priorities undoubtedly create certain challenges. Let me just attempt to move my slides on to the next. Sorry, I've just lost my screen. Please bear with me a moment. Try and find my screen again. Bear with me while I face these technical difficulties. Seem to have lost my Zoom screen.
Do you want me to share the screen, Melinda?
No, I'd prefer to do it, but okay. I can't. Let me just stop sharing and come back. Sorry, sorry about that, everybody. Okay, so hopefully you can now see the second slide. Okay. So I've got on the second slide a quote from the G20 Leaders Declaration. The report, of course, was provided to the G20 finance ministers at the beginning of October 2021. But I've included a quote here from the Leaders Declaration because it's actually quite unusual for something of this nature to be taken such notice of at the level of the Leaders Declaration. So that, I think, shows you that the priority and the importance that the G20 places on ensuring that all members of the inclusive framework can, in fact, continue to advance together on these matters around international taxation and domestic resource mobilisation. To take a step back and to just give you a little bit of a feel for how we put the report together, the report was very much informed by a series of consultation events that we held in the middle of last year over a period of a couple of months. The aim of this process was to cast a very broad net and to hear all perspectives from all kinds of inclusive framework members, and indeed from jurisdictions that are not inclusive framework members. So as you can see from the slide there, hopefully, we had a range of regional consultations. We had 6 events with participation from something like 675 participants from across 155 jurisdictions. So you can see already from those numbers that we didn't only speak to our regular interlocutors within the inclusive framework, but we really tried to get a range of views from both members and non-members of the inclusive framework alike. In terms of the report findings, and I'll go into some details in just a moment, but just to give you an idea of the structure of the report, and the report is available online, by the way. If you haven't seen it, it's available via our website. We've got 5 chapters in the report. The first chapter includes a stocktake on BEPS implementation by developing country members of the inclusive framework. And as I said at the beginning, looks not only at the minimum standards, but also considers progress on other measures designed to combat base erosion and profit shifting, as well as around the ongoing discussions at that time on addressing the tax challenges of the digitalization of the economy. So what became the 2-pillar international agreement. Second chapter looks at international norms and guidance more generally, including things like the uptake of those standards by developing countries, and where adjustments to the existing guidance could help to make that agenda more effective or more relevant to the needs and the priorities of developing countries and their capacity restraints. The third chapter then goes on to look at technical assistance and capacity building and the role that those aspects play in supporting developing countries in their participation in the inclusive framework and also in their domestic resource mobilization efforts more broadly. The fourth chapter then leads on to considering the inclusive framework itself, the governance of the inclusive framework, the leadership of the inclusive framework, and some of the practical aspects of participating in the inclusive framework for lower capacity and developing countries. It looks at how to support practical inclusivity, real inclusivity within the inclusive framework. And then the final chapter is very open and forward-looking. It's premised on looking at domestic resource mobilization more broadly and the possibility of building on the inclusive framework model to consider other areas that could benefit from the kind of multilateralism that we have within the inclusive framework. So in other words, aspects which might be outside of a strict reading of BEPS that could use the inclusive framework model going forward. So I did want to touch on some of the findings, particularly on the stocktake. Now, bear in mind, please, that we did this stocktake getting on for 9 months ago now, back in July last year. So some of these results may be a little bit dated now, but also bear in mind the context that we took as at July 2021, we had 5 years of the inclusive framework's existence. So although the numbers may have changed since July last year, I think they're still sort of indicative of the situation even today. One thing to note here that's quite important, the figures that we've got here and the percentages that we've got here, our definition of a developing country for this purpose, for the purpose of this stocktake, was a non-OECD, non-G20 developing country that's not a financial center. So it's perhaps a slightly smaller subset of developing countries than a pure developing country definition might otherwise find. So you can see on the screen there that we looked at a range of different metrics at different BEPS actions. And I think it's fair to say that progress in terms of implementation is fairly mixed. We did find that there is strong support throughout the inclusive framework community for the BEPS agenda generally, but a lot of developing countries are still on quite a steep learning curve when it comes to implementation. Undoubtedly, there's some very good progress that's been made, but still also a lot of opportunities to capitalize on the potential benefits of implementation. Generally, what we heard from a lot of developing countries is that a lack of capacity or capacity constraints or competing capacity, competition for capacity is really very often the constraining factor in making progress on these areas. So just a couple of points that I want to pick out of here, because I'll come back to this later on. The bullet point on country by country reporting is one that I will return to later on. We've seen quite good progress across quite a large number of developing countries in terms of implementing Action 13 on country by country reporting. But at the same time, when we look at the totality of the requirements of Action 13, we found that certainly as at June last year, only a relatively small number of developing countries, only 3 at that time, had so far completed all of the requirements under the Action 13 minimum standard, such that they were already able to receive country by country reports filed abroad. So I think that does illustrate that although good progress is being made, in some cases, full implementation, getting the full benefits of implementation of these BEPS actions can take longer than perhaps we might have anticipated. Maybe that's due to us being optimistic. Maybe there are things that we can learn from that process last time around, so that we can support countries to get benefits more quickly going forward. In terms of timing here and time frames and time pressures, the tension here is really very real. If we think about the 2-pillar solution and the high-level agreement that was reached there in October last year, there's a real pressure to move very quickly to implement that high-level agreement. When we consider the aspects of that from perhaps a Minister of Finance perspective, from a Minister of Finance perspective, they've been looking at the problem of the tax challenges of digitalization maybe for the last 10 years. So a lot of those ministers are very anxious to be able to put something in place and to have it actually working yesterday. Not even next year or the year after, but they want it done yesterday. At the same time, of course, we have some real pressures on the capacity of governments of advanced countries as well as developing countries to keep up with all of these developments, with the complexities, with the meetings that are taking place, and so on. So we've got a real tension between countries that want a little bit more time to digest and to contribute, while at the same time we've got a real political pressure to move as quickly as possible. And I think that, although I used the 2-pillar solution as the example there, I think that kind of situation actually exists more broadly as well. I won't go into this slide in much detail. I just wanted to include a slide to illustrate here the influence that developing countries have had and are having on the 2-pillar agreement. There is in fact another session on the 2-pillar agreement specifically later today. So those of you who are interested in that, I hope you've already registered for that session. So I don't want to go into this in much detail, but just to say that this is a step change that we've seen in the inclusive framework when you look at the influence that developing countries have had on concrete, significant and material aspects of the 2-pillar solution. We've got a couple of slides here which relate to that 2-pillar solution, but are specifically on technical assistance and capacity building. And I'll come back to this aspect as well when I get to recommendations. There was a very, very important recommendation in the report looking at technical assistance and capacity building, specifically in relation to the 2-pillar solution. And we've got on this slide and the next slide some of the aspects of the capacity needs of developing countries in relation to Pillar 1 and Pillar 2. When we talk about implementation here, I think it's important also that we include not just implementation once those policies, once those rules, once the laws have been agreed and finalized and put in place, and we're into monitoring compliance of multinational enterprises. When we talk about implementation in this context, we can talk about implementation right from now, from the beginning of this year, from October last year, of countries being involved in ironing out the finer details of the policy aspects so these talks are still ongoing right now. In fact, there's a TFDE, Task Force on the Digital Economy meeting going on right now, and there's a Working Party 11 meeting going on right now as well, I believe, to discuss policy aspects of the details of Pillar 1 and Pillar 2. We'll also then, once that process is completed and we have coordination and agreement on those policy aspects, countries will need to put in place domestic regulations, domestic legislation, and administrative processes and practices to actually operationalize what has been agreed at the inclusive framework level. And only after that has occurred will the monitoring of compliance aspect take place. So we've got a list of things for Pillar 1 here, and also for Pillar 2 on this next slide, that are being looked at and that we're already considering as part of our technical assistance and capacity building plans for developing countries. I'll turn then to the main recommendations that are set out in the report. First of all, to the overarching recommendation that is put front and center of the report. And this is a high-level overarching recommendation, essentially for continuing along these lines, for continuing this work, to make sure that we continue to monitor progress by developing countries at the G20 level as well as at the inclusive framework level, and making sure that at those highest levels, the priorities, the views, the input of developing countries are fed into and continue to inform the strategic direction of the inclusive framework. So this is a really important aspect, I think, of making sure that the inclusive framework meets the needs, meets the priorities, and benefits all of its members, despite the fact that the inclusive framework was originally the mandate of, or the baby of, the G20. So we've got to try and sort of square this circle of the inclusive framework of having this top-down direction from the biggest and the most powerful countries in the world, represented through the G20, but which also explicitly operates with all members on an equal footing. So this recommendation is for there to be ongoing work, for us all to be very conscious of the fact that while we will still to have some leadership from the G20 at the inclusive framework, it's really important that we have mechanisms available for developing country views, developing country priorities, and developing country perspectives to feed into that process, including at the most strategic levels. The other very high priority recommendations, so we have sort of two tiers of recommendations. Those are the highest priority, of which there are these 5 that I've mentioned, the first one, and there are another 4. And then we've got a series of other recommendations based around the various chapters of the report. So the other highest priority recommendations of the report, and I'll take the one on the right-hand side first here, because I've already mentioned this, and it's around the importance of technical assistance and capacity building support to developing countries, so that developing countries which have limited or lower capacity can continue to participate in the ongoing discussions on a truly equal footing, and so that the inclusive framework can become increasingly representative of all of its members. As well as, of course, down into the future to actually adopt, operationalize, and monitor the 2-pillar international agreement measures as they're put in place around the world. The one on the left-hand side here was a recommendation to consider how we can ensure that country-by-country reports are more accessible to developing countries. Country-by-country reports, of course, were a flagship of the first phase of the BEPS project, which concluded with the BEPS reports in 2015. They're a really important tool that should be available to countries for risk assessment. That was the whole reason that that work was undertaken. So it's really important for all countries to be able to access country-by-country reports that they're entitled to for that purpose, while at the same time acknowledging that country-by-country reports might include some very sensitive, confidential information which needs to be protected. So we've got those mechanisms in place. It's a matter of how do we make this breakthrough so that developing countries can more quickly get access to country-by-country reports so that they can share in the benefits of that information and undertake more effective and efficient risk assessment for BEPS. The next lot of the highest priority recommendations that you can see now on the screen, we've got one in terms of governance arrangements for the inclusive framework, considering how to amplify the voices of developing countries in a structural sense through the inclusive framework to ensure a truly equal footing in a practical sense. So there's a couple of aspects here. One is on the leadership of the inclusive framework, and the inclusive framework is actively considering this right now in terms of what structural changes could be made to the leadership arrangements to embed and to really put in place within the structure of the inclusive framework opportunities for developing country voices to be more easily heard, as well as updating the mandate for the advisory group on cooperation with partner economies, again, as a way of ensuring a structural input into the direction of the inclusive framework at the highest levels. And finally, on this screen, we've got a high priority recommendation on value-added taxes, goods and services taxes. This came about because, of course, under BEPS Action 1, we do have quite a strong crossover with VAT GST, and we know that the international standards on VAT on e-commerce have been quite widely adopted around the world. There's a lot of crossover here with the work on BEPS proper. And therefore, we think that there are some real opportunities to have a closer relationship between VAT and the current Working Party 9 and Global Forum on VAT and GST with the inclusive framework more broadly. So we think there's a lot of potential synergies there that could be capitalized upon. The other recommendations that are identified in the report, as I mentioned before, fall under the various chapter headings. So under the heading of international tax norms and guidance. Developing countries identified in particular base eroding payments as an ongoing BEPS issue for them, that where additional guidance or additional tools could be particularly useful. We do already have good guidance, I think, on excessive interest that was developed under BEPS Action 4, but countries have told us that they often struggle with base eroding payments in the form of things like excessive royalties, management or other service fees, and so on. So there's an opportunity there, I think, for potentially for additional guidance or tools in that space. On the right-hand side, we had a cross-cutting theme in the report of looking at the effective and efficient taxation of natural resources. Of course, natural resources are really important to quite a large number of developing country members. So that's why we had this particular focus on taxation in this sector. We already do a lot of work here, much of it in partnership with other organizations like the African Tax Administration Forum and also the Intergovernmental Forum on Mining, Minerals, Metals and Sustainable Development. But the report found that this kind of sectoral focus is really effective, a really efficient way of supporting domestic resource mobilisation in resource-rich developing countries. The other aspect here, which is relevant, is that it's a very dynamic space as the world faces the challenges of climate change and the expected changes in each of our economies as a response to climate change. Other recommendations around capacity building and technical assistance. So in addition to the specific program supporting implementation of the two-pillar solution, there are recommendations to continue to expand capacity building support on tax treaty related matters. There was quite strong demand for that from a wide range of our developing country constituents. Also on strengthening tax inspectors without borders as a model for peer-based learning. We've had very, very strong support for the TIWB model as a really practical way of capacity building, of countries learning by doing, of getting away from sort of theoretical training and getting straight into the really practical way of conducting capacity building support. And we're seeing more and more demand for TIWB type approaches, including situations where we are able to have TIWB experts from developing countries themselves. So South-South cooperation, which is especially valuable, I think, because it means that the expert themselves will often have a really strong understanding of the capacities, the constraints, the priorities of their host institution. And the last one that we've got here under capacity building and technical assistance is around ensuring high-level political awareness and buy-in. And that's something I think that perhaps in our optimism at the beginning of the inclusive framework, we maybe didn't pay enough attention to. And perhaps that is one of the reasons why some of these legislative changes have taken a relatively long time to materialize. One thing that we did find talking to a range of developing countries is the difficulty that is often encountered in convincing high-level stakeholders, so ministers, parliamentarians, parliamentary committees, and so forth, to prioritise BEPS-related reforms. So for this, we need high-level engagement and also the ability for communication materials and communication tools that are pitched at those high-level political audiences. So very much not the technical details in the weeds that us as tax nerds might prefer, but rather elevated to a high political level, focusing on the priorities and what it might mean for the country themselves. Another series of recommendations around the governance of the inclusive framework and in terms of practicalities. The ones we've got here are really on practical aspects. We've had 2 years of virtual meetings as a result of COVID. Now, I'm sure we're all thoroughly sick and tired of COVID, and we were really waiting to get back to normality. But if there's one advantage that all of this has provided, it's meant that we've had virtual meetings which have leveled the playing field and have taken away a lot of the burdens in terms of travel time and travel cost for lower capacity countries to participate in meetings which ordinarily would have taken place at our conference center in Paris. So that has been perhaps a bit of a silver lining. But of course, with 2 years of Zoom meeting experience, I think we all know that there are some things which are very good done over a virtual format. There are other things which remain really difficult. So if we're really trying to negotiate very complex, very technical matters, where we've got a whole range of viewpoints, sometimes a face-to-face meeting might be a much more efficient way of doing that. So Going forward, and hopefully we are coming towards the end of virtual only meetings, and we will start to see face-to-face meetings come back as we work through 2022. We want to be able to keep the best of both worlds, if you like, to make sure that we have the ability for virtual meetings where that's appropriate, but equally where a face-to-face meeting is really what's required to support developing countries to overcome some of those resource constraints so that they can participate in physical meetings as well. Excuse me. The other recommendations under this heading, we know the importance not just of technical assistance on tax technical topics, but also in terms of what you might call soft skills. So negotiation and diplomatic skills to ensure that officials from developing countries can be really effective advocates in some often very complex and dynamic multilateral settings, which can be really challenging if you haven't really done a lot of that work before. The last recommendation on this slide is also really very interesting. We found a very promising avenue or promising opportunity for encouraging active participation was around the promotion of regional collaboration. It was actually something that came to the fore in part because we did these regional consultations, and we found that this kind of approach was really very, very well received by participants. There's still, of course, a lot of diversity even within any particular region, but we did find that having a regional approach allowed countries to capitalize on the commonalities that they might have within a region. In particular, things like being on a similar time zone so that you're not having to get up in the middle of the night to join a meeting that's on Central European time. In some cases, having a common language, and that was obviously particularly the case when it came to Latin America, or even just the familiarity of knowing your neighboring countries perhaps rather better than being able to know a bigger, more diverse global group. So we have found that these sorts of regional approaches were really well received, and we're working very hard with some of our regional partners to increase the level of our regional collaboration. Finally, the last recommendation on the future of the inclusive framework, this very open, forward-looking chapter at the end of the report, was that the inclusive framework should consider developing countries' priorities for multilateral dialogue to address issues beyond BEPS. And we're seeing some of that coming to the fore now, including through the discussions at the G20 on aspects where the inclusive framework could well be a model for multilateral dialogue for areas outside of BEPS going into the future. In terms of what we've done since the report was published, I wanted to focus in particular on that overarching recommendation, perhaps one of the most important aspects of the report for ongoing dialogue and ongoing monitoring of developing countries, their priorities, their views, and so on. So as a follow-up to the publication of the report, we had a ministerial roundtable hosted by the Finance Minister of Jamaica, the Honourable Nigel Clark, back in November of last year, so very soon after the publication of the report. This roundtable included a number of ministers, vice ministers, deputy ministers, and senior officials from a wide range of developing country inclusive framework members to discuss the report, to discuss the recommendations in the report, and in particular, to consider their priorities in terms of those recommendations. Minister Clark released a statement of outcomes at the conclusion of that roundtable discussion, identifying a number of things as particular priorities from the standpoint of ministers of finance or similar high-level officials. And I've included some extracts from that statement of outcomes on this slide and the next one. So specifically, Minister Clark identified as particular priorities that developing countries hope and expect to benefit from the international tax rules. So in other words, developing countries, of course, haven't joined the inclusive framework just because it was something to do. It's absolutely perfectly reasonable that all members of the inclusive framework will hope and expect to benefit from the international tax rules. And in order to make that a reality, technical assistance and capacity building are an essential part of all of that. So Minister Clark very much agreed that a comprehensive technical assistance program that's tailored to the needs of individual countries should be a really high priority when it comes to implementing the two-pillar international tax package. He specifically also mentioned the need to ensure that the international tax system takes into account the circumstances of small island developing states, including those that rely on financial services. And more broadly, that in implementing the BEPS agenda, that the realities and the circumstances of developing countries should be taken into account as well. So in this regard, he specifically singled out the example of country-by-country reporting and the challenges that face developing countries in accessing country-by-country reports filed abroad. So again, coming back to that aspect that I mentioned earlier. So in addition to those, Minister Clark also identified the recommendations on the governance structure of the inclusive framework as a priority and as a means of ensuring that the inclusive framework could become ever more representative, as he put it. And also as a reflection on how, requesting a reflection on how regional bodies could be made more effective in supporting developing country participation in the inclusive framework. And finally, a number of areas outside the current mandate of the inclusive framework on BEPS were identified as possibly benefiting from the inclusive framework model for multilateral dialogue. And in this respect, Minister Clark specifically identified those relating to climate action, tax and the sustainable development goals, and also the digitalization of tax administration as areas where he saw the biggest opportunities. So that sort of sums up the report and the findings of the report and the progress that has been made since the report, particularly in the form of that ministerial roundtable. So I'll move now into the second part of our session where we are going to have a discussion. I have the honor to introduce to you two very distinguished panelists for our discussion. We've got Deputy Minister, Mr. Rami Yusuf, and Ibu Pandai Putu Oka Kusuma Wardani from Indonesia, and I'll introduce both of them properly in turn. I just want to take a moment to thank both of you. I know this is an extremely busy time of year, so I'm really grateful that you've been able to take time from your very full schedules to participate in this session. And we welcome both of you to joining us today. Firstly, then to Egypt, to Deputy Minister Mr. Rami Yusuf. So Rami is the head of the tax policy unit at the Egyptian Ministry of Finance and is leading the range of tax policy reforms that are being undertaken by the government of Egypt. It's a huge task because the government of Egypt is undertaking a whole range of tax policy reforms at the moment. So Rami, welcome. Thank you very much for joining us. You and your Minister of Finance, Dr. Mait, participated in Minister Clark's ministerial roundtable last November, as I recall. Can you give us Egypt's perspectives on your key priorities in terms of the recommendations of the report, please?
Thanks, Melinda, for the introduction and the informative presentation. Good morning and good afternoon and good evening, everyone, according to your location in the world, of course. I would like to thank you for the invitation and the opportunity to participate in the panel discussion on the developing countries and the OECD Inclusive Framework. Of course, with this large number of audience, I would like also to thank the ICD team who organized the tax and development days. We get to see the final outcome. However, there is a lot of work and effort invested to make it successful and to run it smoothly especially in the virtual environment we are living in these days. In relation to our discussion topic, great progress has been made, let's admit this, by working together on an equal footing in shaping international tax developments, and together we managed to reach a great milestone, recently contributing to shaping the historic international tax reforms negotiated by the Inclusive Framework on BEPS through joining the final statement and the detailed implementation plan for a two-pillar solution to address the tax challenges arising from the digitalization of the economy. Since 2016, Egypt enjoyed excellent cooperation with the OECD, successfully implementing the BEPS minimum standards and other areas of international tax to strengthen the international tax system by the necessary legislative reforms, and at the same time build capacity in tax administration to be able to support the implementation of international tax standards to tackle tax avoidance and encourage foreign direct investments. The OECD report for the G20 on developing countries and the OECD Inclusive Framework on BEPS highlighted several recommendations, where we believe these recommendations are valid. However, if you allow me to share three of which are considered of a high priority to Egypt. Firstly, there is two aspects in relation to capacity building and technical assistance. The first one would be to ensure developing countries can adopt implementing the two pillars measures in appropriate and timely manner, including areas that have been particularly challenging previously during the application of related instruments, such as the multilateral convention. Such support must take account of the multiple and competing domestic resources mobilization priorities facing low capacity countries. Second aspect is to further strengthen the tax inspectors without borders work. So the TIWB had a great impact on building the technical capabilities for the transfer pricing audit process in Egypt. So, for example, to make it clear, as a result of the support provided by the TIWB program, in 2021, the Egyptian Tax Administration managed to finalize TB audits with adjustments amounting to 140 million USD. And this led to increase in the collection by 32 million USD. And at the same time, we ensure that M&Es are taxed fairly through reaching equitable settlements with taxpayers. Secondly, in the light of growing importance of VAT and the crossovers between the working party 9 on consumption tax and the inclusive framework, stakeholders should consider integrating WP9 into the scope of inclusive framework. For example, in the cooperation with the OECD in December 2021, Egypt successfully introduced the VAT and e-commerce in alignment with the OECD standards. Hence, it's important to promote greater cooperation among developing countries to share experience and promote the VAT on e-commerce. Finally, we recommend to intensify and continue the current tailor-made technical assistance and the capacity building initiatives, which have been shown to provide significant benefits over the medium to long term, and expand the work to support capacity building on tax treaty related matters, including the application of the MLC, as well as prevention and resolution of tax disputes through the effective use of the MAP, the multi-agreement procedures. Other areas also of high priority to Egypt, as mentioned earlier by yourself and identified during the ministerial roundtable hosted by Finance Minister of Jamaica, His Majesty Clark, in November 2021, are the first one, the digitalization of the tax administration, tax policy work in relation to the climate change and the carbon pricing. Egypt will host COP27 this year, and even before that, We have been very active in the space of climate policy change, being the first country in the region to issue green bonds, for example. I believe creating awareness of the role of fiscal instruments in the climate policy and introducing related recommendation is something worth exploring. Thank you very much.
Thank you, Rami. That was really, really interesting. I think clearly we still have a lot of work to do together. So I look forward to continuing our deep cooperation with Egypt. It's always a pleasure to talk to you. You emphasized a lot at the beginning there the importance of technical assistance and capacity building on the two-pillar international tax package. And I just did want to remind people, if you didn't catch my remarks earlier, that we have another session later today coming up on that topic. So if you're particularly interested in that, you may want to tune in to the third session in this room today. So without further ado, I will turn now to Indonesia, to Ibu Putupande Oka Kusumawardani, who is the head of the State Revenue Policy in the Indonesian Ministry of Finance's Fiscal Policy Agency. And in addition to her many domestic roles within the Indonesian Ministry of Finance, I understand that Bu Oka has also been appointed last year to the UN Committee of Experts on International Cooperation in Tax Matters. Bu Oka, can I ask you to give us your views on the report and its recommendations? And in this, I'm interested not only in Indonesia's perspectives as an emerging economy and a member of the Inclusive Framework, but also in particular because, of course, Indonesia holds the G20 presidency this year.
Thank you, Melinda. I think I would like to first thank you for the comprehensive presentation, and also for Dr. Rami Youssef for sharing the views. Yeah, the OECD report focuses in some part discussing the importance of continuous collaborations, especially in overseeing the development of international taxations. Well, as we know, the economy changes very dynamically, and the related instruments are also very fast changing, both in terms of the type and the level of complexity, so that the implications for various things, including the taxations, are often quite big and large and significant. And the speed of the economic changes is often not balanced with the speed of adjustment in terms of the taxations. Not to mention discussions that take place at a global level often do not involve all parties due to limited venues, time differences, and then differences in priorities and interests. But in fact, the economy is in most cases connected and between countries, of course. And therefore, it is important, agree, to have a good and continuous coordination to share experiences, share knowledge, share thought, and especially regarding the taxation aspect, so that the policies drawn up by the tax authority in various countries can be in line with their domestic and also worldwide economic development. Well, in this case, the tax and development has been on the G20 agenda for years, and recognizing especially the need for the capacity building to improve the tax system and also the revenue collections. Hopefully, for developing countries, it can help to be less dependent on foreign aid in some way. And some work performed in this area includes also the effort to improve the capacity on the domestic resource mobilizations. The G20 has supported the establishment of bodies that include developing countries and also allow a broader participations in international tax negotiations on tax transparency, on tax avoidance with the BEPS project. The report, the 2021 Rome Leaders Declarations you mentioned, it also noted the OECD report on developing countries and the OECD G20 Inclusive Framework on BEPS, examining the developing countries' progress through the participations in the G20 Inclusive Framework on BEPS, and possible areas where domestic resource mobilization support could be further support it. And in that declaration as well, the G20 requested the report to help ensure the inclusive framework, strong coalitions of countries continues to advance together and converge on the design and implementations of the global tax rules by addressing the needs of lower income or lower capacity countries. Well, the 2021 report of the OECD, it was quite and really useful to take stock of where the developing countries stand in these discussions and what else can be done to further improve the participations to make it more effective. Well, in my opinion, in this regards, when we're talking about the supports given, we can say there is three things at least. Well, the technical assistance and knowledge sharing operations beneficial to carry out, even though several initiatives in the field of international taxations have been running, especially for the area that have been particularly challenging to understand. For example, those related with the BEPS action plan, 15 BEPS action plans such as MLI on tax treaty and then hybrid mismatches, harmful tax practices, EOI, automatic EOI, transfer pricing, country by country reporting. It has its own aspect that needs further understanding due to certain complexity it brings. And in addition to that, even though we understand on how to do or performs certain things like the EOI, then the next question is that how would we use or optimize the data obtained in order to increase and support the domestic resource mobilizations, for example. That is another thing that we need also to complement in addition to what has been done in order to make the understanding is similar or the same understanding or the level playing in terms of the understanding of the subject or substance. Well, these cases, in most cases, this type of program, it could contribute at increasing the understanding on a subject that has been owned so far, so that it is expected to improve the existing performance in the future. So it's like there has been the understanding, but then we need to refresh the understanding in the future so that we can have can expect to have a better performance going forward. And then the technical assistance and sharing experience also will certainly be helpful in understanding a new or recent international initiatives. And this is when we say, or when we discuss about the digital economy taxations, like you mentioned, Pillar 1 and Pillar 2. After the initiative or during the initiative is progressing, or when it is finalized, and the discussions can be rolled on, and then sharing of experience will be can be further emphasized. Well, their implementations in a good and consistent manner are also part of the big concern in the Indonesian G20 presidency currently. And for sure, we share the same view that it is necessary to have as many as possible development partner support in providing the relevant tailor-made capacity building and technical assistance. Because when we're talking about the staging of countries where they stand on a certain subject, of course, it varies. So that bespoke technical assistance would, of course, be required. So that they can also adapt and also implement in an appropriate manner and a timely manner, because otherwise, well, global implementations of those initiatives are perhaps well, it requires the same understanding in advance prior to the implementations. And on another level, even for taxations, which is beyond the BEPS and transparency issues, or even not included in the global commitments or agreements, when we're talking about the unilateral measures, then sharing experiences is still important and useful to perform. Especially to learn and to know how it applies in the respective countries or jurisdiction, and then anticipate the various implications when it applies in the respective countries or jurisdictions, and anticipate the various implications when applied in our own country. So currently, the OECD coordinates the exchanging information regarding the crypto, for example. This initiative also received great attention during the recent fora, and it is also important to keep up with the rapid development of technological innovations in the financial sector. So a great attention on this is also noticed, and perhaps this is a good area also to increase our contributions in the future, our coordination in the future. Well, Indonesia holds the G20 presidency this year, and one of the key themes of the presidency is inclusion, stressing that the G20 needs to work with every country on all global economic policy issues, including on international taxations. The report that you've been presenting, it was a good one, including a range of recommendations to help ensure that developing countries continue to benefit from the participations in the G20 or OECD Inclusive Framework, and then the coalitions of inclusive framework countries continues to advance in the international tax cooperation agenda together under the leadership of the G20. And as a start, you mentioned that a minister roundtable with developing countries and interested G20 members was hosted by Jamaica in the last quarter of 2021. Well, in this case, Indonesia is expected or wants to scale up cooperations under the G20 agenda on tax and development to make sure that beyond capacity building, developing countries' priorities in tax are also addressed and discussed. Well, to that end, ministerial symposium, or at least there will be a symposium is expected to be conducted in the margins of the July 2022 during or in the middle or perhaps around the FMCBG meeting to raise awareness on developing countries' issue on international taxation aspect. Well, with the collaborations with the relevant stakeholders, we hope to get the input as many as possible from the participants, and hopefully many developing countries would attend and also participate. And then we can perhaps do some work on that to report the results to the G20 FMCBG meeting with a view to get a common understanding and also perhaps support for this important issue. Well, Melinda, I think I will stop here. We'll revert back to you for the floor. Thank you so much for giving us the opportunity to express our view on this. Thank you.
Thank you very much, Bu Oka. It was very interesting. There's clearly still a lot of work to be done, and I think we're very much very grateful for Indonesia's leadership in the G20 and specifically around the idea of a symposium in the middle of the year on these topics to keep the momentum of the work going forward. Now we have pretty much run out of time, but I noticed that there was a question in the chat, which I will try to respond to very briefly. And forgive me, Paul Dehaan from CaperBuild, if I don't give you a really extensive answer, given the time that's available. The question was, Paul was saying he's not wholly convinced that developing countries need immediate extensive training on Pillar 1, Pillar 2 agreement, as there will not be a big benefit for them in the short, medium term. Other areas like transfer pricing, tax accounting, audit, etc., are, in my view, more important. I think there's a couple of aspects here. Firstly, we're not talking about either or. I mean, of course, countries have limited capacity and we can't always do everything that we would want to do, but we're certainly not stopping capacity building on transfer pricing or on audit or anything like that. But I think more broadly, I think developing countries need to be participating in developing the rules. I think that's what is the game changer as part of the inclusive framework. And therefore, part of the capacity building and technical assistance at this point is in supporting developing countries to really actively participate in that discussion and informing the rules so that the rules will actually benefit them into the future. So it's a very fundamental question around participation. It's not just implementation of rules that have already been agreed at some other place. So it's a very brief answer to your question, which we could probably talk about quite extensively, but given the constraints of time, I think I will need to leave it there. I don't see any other questions, and I see somebody else, Marcelo, has responded to Paul as well, so you might be interested to have a look in the chat there of the ongoing discussion. If you have further follow-up questions, we're very happy for you to contact us by email to continue the dialogue. But I think as I have very much gone over time, the only thing left is for me to thank our two panelists and to thank all of our participants for their company today. And I hope to see you again soon.